Something just happened with one of the biggest crypto companies, and it's not a great look. Gemini, the crypto exchange founded by the Winklevoss twins, is now being sued by investors. And the reason behind it is raising some serious questions about what really happened after their IPO. Let's break this down. Back in September, Gemini went public with a pretty strong narrative. The pitch to investors was simple: growth, global expansion, and a scalable crypto exchange platform that could compete at the highest level. And at first, it worked. The stock launched at around $28. Even pushed up toward $40 shortly after. But then things changed fast. Today, that same stock is sitting closer to $6. That's a drop of over 80%. And now, investors are claiming they were misled. According to the lawsuit, Gemini allegedly told investors one story, and then quietly pivoted to something completely different behind the scenes. Instead of doubling down on its core exchange business and global expansion, the company shifted toward a new direction, focusing on prediction markets, cutting costs, and pulling out of key international regions. That included exiting markets like the UK, Europe, and Australia, and cutting around 25% of its workforce. From the outside, it looked like a complete strategy reset. And that's where the problem comes in. Investors claim this pivot wasn't properly disclosed when the company went public, and that they bought in based on a completely different vision than what actually played out. The lawsuit argues that key details about this shift were either downplayed or not communicated clearly, which led to inflated expectations, and eventually major losses when reality hit. Now, whether those claims hold up in court is still to be seen. But the bigger takeaway here is something that goes beyond just Gemini. Because this isn't the first time we've seen something like this in crypto. The space moves fast, narratives change quickly. And sometimes the story investors buy into at the beginning doesn't end up being the story that plays out. That's why a lot of people in crypto are shifting how they approach the market. Instead of focusing only on centralized platforms or companies, more attention is going toward decentralized infrastructure and early-stage innovation. And that's where projects building around Bitcoin are starting to get interesting again. One project that's been getting attention recently is Bitcoin Hyper. Bitcoin Hyper is focused on building a Layer 2 network designed to expand what Bitcoin can actually do, bringing faster transactions, lower fees, and support for more advanced applications. The idea is pretty simple. If Bitcoin continues to dominate as a store of value, then the infrastructure built around it could become just as important as the asset itself. And historically, when new layers and ecosystems start forming around major blockchains, early-stage projects in that space can move quickly, especially once they start gaining attention or getting listed on larger platforms. Of course, like anything in crypto, there's always risk, and you should always do your own research. But it's exactly these kinds of early opportunities that a lot of investors are watching closely right now. Now at the same time, something else is happening across the market. More people are starting to rethink how they actually hold their crypto. Because situations like this, whether it's lawsuits, strategy shifts, or market volatility, remind investors why control matters. That's why self-custody is becoming a bigger focus. One option that's been gaining traction is the Best Wallet app. It allows you to securely store your crypto, but also gives you access to new token launches and presales directly inside the wallet. So instead of relying entirely on centralized platforms, you're able to manage your assets yourself, while still staying connected to new opportunities in the market. And when you combine that with early-stage projects like Bitcoin Hyper, it creates a completely different approach to how people navigate crypto. At the end of the day, though, the Gemini situation is a reminder of something important. In crypto, things can change fast, narratives shift, strategies evolve, and not every story plays out the way it was originally told. So the real question is, are investors starting to move away from centralized platforms and towards something new?